All right. So we'll have a couple of minutes. I have plenty of questions, but let's start with the basics. We're here to talk about crypto and as an investment thesis. So let's start with a basic question. What is really shaping crypto markets today?
So crypto markets today, I think, are largely being shaped by the arrival of regulatory clarity. And for the last 5 years, getting to a place where regulatory clarity existed was the main driver of the market. No investment committee in the world is going to invest in something that has no legal definition. Not at scale and certainly not in an institutional way. And I think that's what you're finally seeing is a real unlock from a portfolio management perspective of how people can actually allocate to the space. And the professionalization of investment in the sector is a really meaningful shift, and it's causing stronger links between crypto markets and crypto market pricing and macro sentiment, which is, I think, part of what we're starting to see, which is we no longer live on an island alone. And that is a really positive thing most of the time, but may mean we're going to see more chop as investors think about either other narratives that are more popular right now or other asset classes they're more interested in, or quite frankly, just geopolitical macro uncertainty.
I mean, that's a really good point. One of the, on another panel, QCP CEOs, Melvin Deng, was talking about, how crypto still have bad press. And if you look at volatility as a volatile asset, and you look at gold or other commodities, still have a lot of volatility, but don't have as much of a bad press. Right now, we're in a, defining moment in a way for crypto. Why do you think that crypto still deserves a place in the investment portfolio of, asset managers and other funds today?
I mean, absolutely. I think crypto also kind of gets all lumped together right now, which is not the best. I think you're going to start to see more differentiation in thesis between Bitcoin and alts and smart contracts and how investors are thinking about allocating. Mm-hmm. But in much the same way you are seeing, really for the first time, a clear understanding of why you should have at least some Bitcoin in your portfolio and quite frankly, surging demand for things like Bitcoin ETFs, even in the last couple of weeks. I think you're going to see the same thing happen to, I think, initially smart contracts platforms, but eventually broadly alternatives as you start to see more institutional adoption of Rails. And I think that's something that portfolio managers will begin to understand in the coming cycle.
Okay, very fair. We talk about, you just mentioned infrastructure in some ways. What do you think it will take to unlock, more adoption and further scale?
So as much as the last 5 years were about regulatory clarity, and I know a lot of people still love to talk about regulatory clarity, we're pretty much there. Like most of the work on that has been put in. We've laid a nice solid foundation. You're starting to see these bills come out, things like MiCA actually be implemented, Clarity Act. We've laid a very solid foundation, and there's clearly momentum, not just in the US, not just in Europe, but on a global basis, to implement regulatory frameworks. There's even, to some extent, a competitive dynamic to that with different jurisdictions trying to outcompete each other for the most comprehensive crypto regulations. That's a fabulous dynamic for us as an industry. But that's not what's going to drive the next cycle. Like, this is sort of a checkbox in some respects where, like, we need to have legal definitions for things. We need to have, standardized infrastructure, but that's not necessarily what's going to drive the next 5 years. Mm-hmm. I think the next 5 years from an adoption perspective are all going to be about operational integration of TradFi and DeFi and CeFi rails into something that can be used in an integrated way. And it's not the most sexy thing, but we don't do a great job of trade ops in crypto for the most part. We don't do it at the kind of scale and level of what I would consider to be financial market norms. You're going to see an increasing push towards having the products that we put out meet financial market norms. We're going to have an increasing need for middleware and post-trade ops and integration for settlements, so that you can actually produce real on-chain financial rails that exist in the critical path of major asset managers, major payments providers. Like, we're still in POC land. The gap from POC land to full-scale critical path integration is largely operational in nature. And I think that's really where you're going to see a lot of grinding work in the next few years, very similar to some of the regulatory work that's now led to a sea change in how we can operate as an industry.
That's super interesting. One thing maybe to go a bit more in depth on is who do you think will lay the ground, will work on that? Because when we saw, Falcon X acquiring 21 shares, we talk about like some kind of vertical integration. How do you think about like who will be the main driving forces? Or are they going to be more, some of the traditional players getting into crypto? Do you think that will be more, scale up? How do you think about that? Who will be building the middlewares, like the risk assessment that you just described?
I think you're going to see a mix. You're going to see some of the major financial firms really be able to adopt the technology, make the pivot that they need, build their infrastructure to a new place. Now, most financial infrastructure at large scale is, like, think in post-trade, for example, you're looking at somewhere between like 10 and 12 firms that really, really matter infrastructurally. They're oil tankers, right? These are massive companies. And so the question is, are all 12 going to simultaneously execute a 90-degree turn on their technology stack and it's all going to go perfectly? I doubt it. I think there's going to be clear winners and losers in this space. I think some of the traditional firms will benefit tremendously from this, but I actually think there's an enormous opportunity for the first time in a long time to see changes in who is providing this sort of core infrastructure and build new firms in this space. I think there are a few current players that are really well positioned for that. I think there will be new players that come out and do a lot of that heavy lifting. And that's unique. We haven't seen a material change in who is actually providing like capital markets infrastructure and back office infrastructure and middle office work in decades.
Maybe one question, you talk about that infrastructure. We've seen, for example, cloud players. I mean, we've seen Microsoft, we've seen Google, for example, with GCP really getting to that, targeting this market, and a lot of them targeting financial institutions. We've seen Microsoft doing the joint venture with LSEG, for example. Google, GCP has been at the forefront of a lot of like partnership. Deutsche Börse, for example, the more. AWS has done the same. Who do you have in mind? Can you elaborate a little bit at the typology of the players who will build that middleware that will unlock adoption, to go further in that crypto investment thesis?
Yeah, of course. So, obviously, I think Falcon X is well positioned for that. It's part of, my thesis on what the future of the business looks like. I think it's really well positioned for that intersection and for to benefit from that growth catalyst. And something I'm particularly excited about from a strategic perspective. I think broadly, when you look beyond, obviously, firms that I have a relationship with, I think you're going to see some firms that are pretty far ahead already. I think like a Boni is doing a lot in the space and clearly interested in investing. I think in other places you are seeing less change, and there are even parts of capital markets infrastructure like corporate actions, like post-trade settlement, things for proxy voting that are still largely done with paper, which people don't necessarily think about. Broadridge has an entire business that consists of basically sending people paperwork to their homes to allow them to proxy vote for corporate governance. That's how far from we're going to, be able to do everything on chain and everyone is going to vote and it's going to be, democratic access to shareholder voting. Like, that is how far away from that we actually are. So I think they're going to be, it's remarkable, right? One of the things I thought was hilarious when I first started 21 Shares is that in some places, they were really excited that there had recently been a regulatory change that no longer required them to maintain a fax machine to take orders. That is a lot of how financial infrastructure works. So when I think about these players, I think some have done a lot and evolved a lot of their technology to be in a really strong position to execute on this. I think in other places, you're going to see more weakness. And crypto native firms are well positioned provided they want to start engaging with TradFi. And I think we're just starting to see that happen at scale. And that's really exciting.
Absolutely. We have a few, more minutes. I would like to touch now on the entrepreneurial journey that you've had. Talking about you've built a company in a very volatile industry and taking the company all the way to the exit. Can you share with us some of the, the learnings that you've had as an entrepreneur, but also, from the crypto investment thesis, looking at, taking ETPs basically as a way to invest in crypto, being a way to broaden adoption and to be successful? Can you talk a bit about both sides?
Yeah, so building in crypto is really hard. It's really, really hard. I think people massively underestimate how hard it is to build in crypto. The volatility is not for the faint of heart. It makes it hard to run businesses. I think one of the things that's also deeply undervalued is we're all suffering from regulatory whiplash, where we spent years building in ways where you kind of had to assume the worst case scenario and build extremely redundant systems and build around essentially a void, build a certain type of muscle and discipline. And it's not paranoia, it's a rational response to market conditions. But now we're existing in a completely different environment where you can actually go on the offense with regulators and engage and build, and you're going to have a constructive conversation. That is not an easy shift to make either. And there's a lot going from, essentially struggling to get a bank account to suddenly having regulators who want to have an active dialogue is a pretty radical shift to go through in just a couple of years. And this is what building in this industry is like. There's this constant evolution, this constant level of volatility that you essentially have to learn to deal with and build into your organization. Now, on one hand, that's really hard. On the other hand, I think if you can do it, it puts you in a really strong position to build something really meaningful. And I think that volatility is going to be less of a feature as time goes on, just given the direction of the industry, and be less of a driver of businesses, which I think is ultimately a good thing. But I know I had a really interesting experience of doing that. I think it made me a better founder. I think it made me more able to build a business that could have that type of resiliency, and building resilient businesses is always a net positive. An exit is always both really exciting and, as a founder, hard. You're letting go of your baby in some way, and I think it's been a very positive experience for me, for the team, as well as, quite frankly, the company is doing well, and I think we were lucky to find the right partnership at the right time. That was sort of the critical criteria, was to find the right steward for this business that could make it better and stronger than it was before, and I think we were successful in doing that. And if I've learned anything in the last year or so, it's how important that actually ends up being, and how exciting that ends up being.
Maybe one last question. What are you excited about? As we talk about crypto investment thesis, we talked about, investing in spot markets. We talked about ETPs. We talked about, we can invest through derivatives. Now you have DATs as well. What are you excited about? What do you think will really drive crypto to the next level? Or, if we forget about crypto, what do we think, asset managers to think about as they diversify their portfolio, and why crypto could be an interesting aspect for them in the coming year?
So from an investment perspective, I think ETFs are the best way to foster adoption at the investment level. I think we often conflate investment adoption with real use adoption, and they're quite different. What's interesting now is you actually have the same firms doing both, right? You have the same firms who are actually adopting crypto ETFs as investment vehicles for their clients, while also adopting blockchain technologies for use in their core systems. It's a really interesting dynamic, but the two things are actually largely not super related. I think from an investment perspective, you are going to see increasing penetration. I think the best way for most people to do that is an ETF. I don't think most people are going to run their own keys. I don't think most people want to process their own wire transfers. Most people don't even want to make their own investment decisions, right? They're mostly buying index products. And so I think the expectation that those people are suddenly going to want to actually manage a bearer asset themselves is unrealistic. So I think the ETFs are going to be, and continue to be, the tip of the spear in terms of actually fostering adoption at an investment level with retail as well as with institutions. One of the things that when you think about an ETF, ETFs are still considered a relatively new innovation that they themselves are still penetrating the market on. Like leaving aside crypto, ETFs in general are still working through their own market penetration and their own investor education and market education around the products. Like the transition from the mutual fund to the ETF is far from complete, and it's been about 20 years. It's continuing, and it's actually ramped up pretty significantly in the last 5 years or so. And I think crypto ETFs in particular will continue to benefit from that. I also think it gives us a nice way to look at what the future adoption of tokenized products is likely going to look like. If you look at the history of ETFs, you can see what it takes to actually shift investor behavior and the types of products they choose to invest in. And we're pretty early in that journey, even for ETFs.
I was going to say, I mean, if you make that parallel between ETF adoption, like crypto ETF adoption and tokenized, bonds, stocks, etc., don't you think, though, that there will be an additional education layer to do? Because on the tokenized stocks, you may need to invest in a different way, while ETF is the same as the way you just buy any other ETF. Don't you think there will be a different, more of a challenge for the tokenized elements?
I'm not sure most people will have any idea they're buying a token. I think for the most part, it will just be rails, and you can have an ETF that's issued as a certificated or an uncertificated security, just like you can have it issued in a tokenized or an untokenized way. I don't know that most people will actually need to learn that, in much in the same way people don't really know how an ATM works, and people don't really know what the DTCC does. And I'm not sure that the average consumer needs to. Now, I think the institutions that actually offer these services absolutely do, and that educational process is moving forward. But that is a much lower bar than needing to do mass market education.
Yeah, absolutely. We're getting to the end. Any closing remarks or anything else that you would like to share on the crypto investment thesis to the institutional crowd that we have here today?
I don't think I've ever been this excited about the direction of the industry. I think it is a wonderful and a remarkable time to be building in this space. And I think it's going to continue to be. It's quite unique, and I'm very bullish on a lot of these sector-based trends. And I know there's been a moment of people saying there's not a great narrative for crypto, or that's why you're seeing inflows or outflows run a certain way, and that's why you're seeing a certain level of price action. But to be honest, I think that we are at a critical inflection point, and if you've been in this industry for a while, it is the most interesting time I've seen in quite a while.
Thank you so much. And we'll continue. We'll find you after if any of you have any questions. Ophelia will be around at the cocktail hour. Thank you so much, and continue later. Thank you.